Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Yeah, thanks, Pete. How we doing in YouTube? Thank you. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p.m. Standard Time. This stream is about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. There is a link in the bottom of YouTube if you're interested in what you see here. And the Trader Lab is a community of traders that have come together to leverage their collective experience. And it's really all about the business of trading. What is the business of trading? How might you develop an understanding of market mechanics? How does the market work? Why does it do what it does? And how might you create a statistical edge to participate in an environment that is always uncertain and is also random? The business of trading is very much the way, it's very similar to how casinos operate. They are in a random environment. The cards coming out of the deck are random. How gamblers play the cards is random, but they use something called anchored inputs. That means they play the games exactly the same way. If you do not do everything exactly the same way, since you are in a random environment, something must be anchored. If it's anchored, you can measure it. If it's random in the sense of the inputs or processes you use in order to create trades, then you are random in a random environment. And there's an old saying, and it's just a personal belief: garbage in, garbage out. And we all see processes or things that seem to work. Our mind tends to look for symmetry and structures and predictability. It's our wiring to avoid risk. Well, this primal need to be right and to be able to predict is really based on a fundamental uh, wiring, if you will, of risk avoidance. So if we're more certain, we have less risk, right? Well, the fact of trading is we cannot be certain. So then we have to look at it more as a random distribution of outcomes. And this is what the Trader Lab is really built on, the business of trading. And we're using a model that has been very successful. That's gaming. So if we can differentiate between random behaviors and gaming processes, then we might have an opportunity, just like the casinos, in spite of the ups and downs, and yes, the gamblers get paid and there is overhead in all businesses, we might have an opportunity to create a long-term business. That's the goal of the Trader Lab, and you're all welcome to visit Trader Lab. And if you're in YouTube, there's a link down there at the bottom. There is no cost to participate. One moment. Got an alarm going off here. Now, today was very interesting. I'm going to be discussing structured trades. Grab a pen and a piece of paper. I'm trying to find an alert that's going off here. If you're hearing it in the background, let me just try to turn this thing off. There it is. Maybe. Yes. Okay. Sorry. Got all kinds of things going off here today. So grab your pen and paper. We're going to take a couple of notes. I'm going to share some statistics and some ideas with you so you can understand the process that we use in the Trader Lab. And of course, you have to vet everything for yourself. Past performance is never indicative of future results. The key of the Trader Lab to understand is it's not plug and play. It does not exist, in my opinion, in the market, because the market is dynamic and always changing. What does exist in the market are certain behaviors or behaviors we might anticipate. And that if they show up and they actually have a vetted statistical edge, then it is up to us to determine if that edge exists for us, that we participate and accept the random outcome of each individual iteration of that process. But if we've done our work and we have the discipline, which is a whole nother issue, to actually do the work and initiate the trades and take the risk, then over a large sample size, if we actually have an edge, we'll extract dollars from the other participants. That is the basis of if you will, gambling and gaming. And the idea is, do you want to sit with the gamblers or do you want to sit with the house? And the thing is, you need to determine how you can sit on the house side of the table. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and a piece of paper. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. If we get into it, we will talk about it. Let's go take a look. Now, first thing I want to do, if you've been following this stream, and I've been doing this for several years here, and there is, so you understand, in the Bookmap Discord Trader Lab community, there are 60 PDFs of these structured trades that we'll be reviewing and many more, plus a library of webinars that goes into this process. And you can, access those, and there's no cost to visit the Trader Lab and participate in the Trader Lab community. And like everything, your mileage may vary. Now, I want to go over some statistics here very quickly. Now, we had a bullish report this morning, right? So this is yesterday's high. The RTH open is over here. So basically we are gapping. It's a gap outside of yesterday's range, outside of yesterday's value. That is a bullish context. Now, we know in trading anything can happen, so let's not get too ecstatic about that. But if we have a bullish report, the market has been battling the last several days, as you probably know, wide ranges, both sides. It's been like a major battle going on, and it gets pretty wild in those wide-ranging rotations. And for me, it's not my favorite condition because it's always trying to find the outside edge to trade outside in. It's called mean reversion, and we always joke in the Trader Lab it's mean. But here's what's important to know about this. Opening outside of range, outside of value, this is the ETH high. So there's a probability. I'm going to just throw a couple statistics out your way and take a note here. When you open higher outside of range in a gap, there's and past performance, by the way, you have to vet anything you hear from anybody, even Trader Lab, okay? It's your job to develop confidence in what you hear. That's why it's called the vetting process. And if you come to Trader Lab, even with what I'm going to show you today, and I show here in the stream every day that I stream, you have to make it your own. You have to develop the confidence in it. So you got to dig into it and understand how it works. So statistically, there's a 76% probability and we're opening here, RTH open, that we're going to get here. I like that. Do you like it? Okay. There's a 68% probability we'll take out the first hour's high, wherever that happens. Now, this is the RTH open. It hasn't happened yet, but write that down. First hour's high. Then there's more. There's a 63% probability we will fill the gap. Isn't that interesting? And there's approximately a 79% probability that we'll check the overnight volume point of control. This is the ETH retail price. The way I think of the auction is shopping. So the auction is random, right? But it's also kind of simple. Oh, next target just got hit up here. Boy, I better hurry up. Hold on, I got to turn these alerts off again. The next target's like 28, which currently we're at in the market, but let me just, okay. Sorry about that. So we have this, that, and let me take you up now. If you followed the stream the last few days, I've been talking about upside targets. This is around 19.25. It's a naked volume point of control. What is a naked volume point of control? It is a retail price that we left behind last time we traded up here. And the market, if you think of it as shopping, if last time we traded up here, this price was too high and we rejected it, we went south of the border. We found eventually what was too low. And if the market now is trending back up, we have the potential to return here. So the first trade, which will be a long, this is the target, this is the target. Now there's more. You go, yes, there's more. Yes, there's more. This is the next target up, microcomposite volume point of control. Why? It is the higher time frame of this. So in the RTH time frame, this was a high volume. If you have a consolidation, so multiple RTH days, and where you have a consolidation, you put them together, it creates an intermediate time frame high volume. So I'm going up in time frame, or fractal as I think of it. Then this is called a single. This is our next target, and currently it's the high of the day. That these are those alerts you heard going off. These are targets. Now there's some more. We have a gap, and we have, where is it? We got something else up here. And we had the NFP up here. In the ETH, we had the NFP high, and then the market sold off from there, remember. So that's floating up in here someplace too. So anyway, those are the levels. Now, starting from there, we're going to go into the RTH open. Now, is everybody with me? By the way, if you have questions, please post them. I'll do my best to answer them. Relevant. Is there a new link to the Discord, the one posted on the landing page? Are you trying the one in the bottom of YouTube? Stephen, can you check out the link in the bottom of YouTube for Discord? Would you please, if you get a chance? And just to make sure it's working right. Oh, you got it resolved? Okay, Stephen, we're okay there. Thanks. Yeah, I will. Okay, so let's get going. Grab your pen and paper, take screenshots. Trader Lab, remember, these streams are available exclusively to you to reverse engineer, screenshot, review, compare to your trade plan. And by the way, nobody has a monopoly on, quote, the right way to trade. The right way to trade, believe it or not, is what aligns with you psychologically and statistically. So let's look at the first trade. Now, hold on a second here. I got to get my brain in gear. One moment. Okay, RTH open. This is called the developing volume point of control, and what it measures, and it's very sensitive on the open because it starts at 0. It measures where the volume is. So as the volume shifts, and if the market's moving directionally, there's no real volume there. It's when it pauses or consolidates. When the market pauses, this is going to track this changing volume. And it's really important. And I made up, I started doing this a long time ago, like in the mid 80s and 2000. And I learned market profile from Peter Stottlemyre. He actually created it. And that was like in the mid 80s. And I really didn't get it. I'd like to tell you, oh, it's so clear. No, nothing's clear. You really, at least for me, I had to find a way I could relate to it. And market profile is very much a statistical thing, and I don't really think of it too much statistically. I think of it more behaviorally, and it's just, again, how I relate to it. And I found that by finding alignment psychologically, I could translate it. I started seeing it as a language of participant behavior. So based on that, I created a process, and it took a long time naturally because, like all of us, we're trying to figure something out. And well, I spent years, trying to figure it out. And again, I only figured it out for me. I'm sure you guys, and that's why Trader Lab exists, is that we can all get better. So that's why the Trader Lab is a community of traders. Our senior traders over 50 years experience, and I've got 45-ish. So in there. So let's look at the first trade. So let's look at the language. If the retail or high volume is here, and we shift down, it is saying this is too high. That is resistance. Now, I define support and resistance based on consolidations and volume, just saying. So we get this thing. Now I know we have about a 43% probability of filling the gap. So who knows, right? Don't we wish we knew? So at 8:30, and I posted these trades, and there's screenshots of them actually in the Trader Lab. This right here is a micro structure. Let's watch it. Right here, I see my seller. This is too high. Now I got long at 41 seconds in. Let's just see where it is. Yeah. Right here, so I see my seller. This is too low. Now right here is micro structure. Now this is very nuanced, and what I'm going to show you is advanced, and also something you can develop if you develop a market understanding. This is a micro consolidation, and I see my buyers take over here. So what I have here is my sellers, okay, that's delta, coming down. I don't see much coming out in sell stops, okay. So I see a buyer here. Now this is resistance. Notice what happens where we come back, right here. So I'm going too low, too high, resistance, watch. And where do we come? We come back to support. I see a buyer again. So resistance, support, resistance. Now what? I'm going, teeth chattering because I don't know. Support, buyer. So I had a buyer here. Now I'm in order flow, and it's very nuanced, but buyers were here. So these guys, the sellers, buyers are here. I get above these guys. That suggests that they were being absorbed. I rotate down. Just watch the behavior. But the buyers were here. If the buyers like the price over here, think shopping, and it goes on sale, but this is too expensive. And I think since I'm out of yesterday's range, I have a gap, I have a bullish report, and also I've noticed, in spite of the battle going on, two-sided trade, and it was like a shootout, that the market has been holding on to the long side and moving higher. Tells me trend up. So I want to be long. And I accept that I can get stopped out under here and come down here, and then my next trade would be here. This for me is trading. I cannot predict. Write that down. The best you got is maybe. So maybe this is too low. Maybe I don't see any sellers under here. I see my buyer. Maybe if I don't get under here, I'm going to take this out, and I'm going to go to my next target. Maybe. I get long here. And I posted this, 8:30 and 41 seconds. And I'm thinking, gee, why didn't I get long here? Why? Because I had to wait for some, I don't want to use the term confirmation, but let's look at this. Too high, too low. Clueless. Too high now is here. Too low is there. This is the median price. So can I clear this? Well, now this is my resistance, and that's my support. That's how I got long at 840, which was this. As soon as I came above here, I put the long on right here. And then teeth chatter some more. Now in the Trader Lab, this is also a long. This is also a long. I got long early. I mean, I got long. I have it. That's what I do. I don't know. I could have got long here or here. All these are Trader Lab structured trades. This is the first target for the scale. Now I'm sitting with my stop under here. VPOC migration. And now here's an interesting thing. Let's look at this. This is VPOC migration. It's a variable high volume node. It's right there. I'm just going to make a little variable high volume node. I made these terms up. VPOC migration, I made them up. I created this stuff, at least the terminology, because Nobody was doing this, at least that I was aware of when I started. Remember, I started trading in 1980, and I've done everything probably you guys have done, unfortunately, probably a lot more. We pull out to mid. Now, now I did not add here. And this is like an optional thing, but here's the issue for me. So I'll tell you why I did not add. First of all, I had a nice position. This now is a variable high volume node, and we are below it. Whoop, let me try to get this here. So there's a couple of things here, and I got to show you this. When I was in this trade, now I'm going to show you, I'm going to take you into something. Let me see if my drawing tool works here. Let's just see if it does. Look at that. This is microstructures. Now, this is a bit advanced in the sense of the market operates in fractals. And I know you guys think of them as time frames. I don't use time. I use structure, because the clock is not what determines any of this. It's the participant behavior that creates the structures, not 1 minute, 3 minute, 5 minutes. It's like, what, you sit here paralyzed until 5 minutes goes by? I don't know. I can't work like that. I've been there. I've done it. It didn't work. So for me I'm looking at the behavior. So let's read the behavior. In the developing time frame, this is the retail price, the highest volume. As it's moving higher, it's suggesting what's below might be too low. That's why I'm labeling these. So variable high volume node, moving higher, looking good, Lewis. But what's on the other side? The same thing in a fractal. Here's high volume. There's my break low. Here's my pullback. Now, when I saw this, I'm just going to tell you one through my head. I wanted to exit right here. However, and this is part of the thing about trading in multiple time frames, I have this as a target, and I have a lot of confidence in what I do. Doesn't mean the market cares about my confidence. It's that I've done this for so long, and I understand auction market theory. Why does the market behave like it does? That's what Trader Lab is built on. Understanding how the market works, why it does what it does, and how at times you might get an alignment. The other part is this could very well be an exit if it's in your trade plan, or even a short if you're a counter trend trader. Remember, we're in a gap and we're outside of yesterday's range. So for me, shorts aren't on the list, but it could be a trade management process. But for me, in this context, and I'm only talking about me, not anybody else. Everybody can do their own thing. There's no right way or any way to trade, right? We all know that. So for me, it could have been along here, back to here. But because I did not exit here, I just sat. And my stop is down under the low of the day. And my mental state is, notice where we come. Let's look. My mental state is, why didn't you get out here? Watch. We pull back here. I still don't have a location, I don't think. Let me look here. No, not yet. So, and this is my next target here. Okay. So this trade here, and these are all posted in Trader Lab. This trade was over for me. That one. Now I see this. This is absorption. What this suggests to me is if I can break that, we're going to get a rotation. Fine. And then the next opportunity, I'm going to show you that one because I posted this one, was at, here, let's watch, here. Right here, what is this? Let's come back and look. This is the retail price, variable high volume node. I got to mark it. These move around based on how the volume distributes. And here's another thing, and I posted this trade in Trader Lab also. I kind of like this one. Let me just put this in here. This now is stale. So what I'm doing with these variable high volume nodes is as the volume moves around, which is based on the participant behavior, I adjust them. So right now, and here's something else that's really good about this trade. Let me just go back here, right here. This right here is the retail price. I know that right here, actually. Let me just see if I got the right time here. Yes. Right here, I see absorption. I take out the stops and the VWAP in the mid. The volume point of control is up here. This is the retail price. Let's think of this logically. This was too low. It was retail. If you come back to the store where the price was lower and the current price is here, then the potential exists for this, if I see a long, to come back here. So I posted this in TraderLab, and I actually do screenshots of the trades. I took a long here, I got out there. That was it, bing bang. And I also had a runner on just in case we cleared this, because my next target is here and there. And I don't know, and this is set at 9:30, so we could have gone right here, which was 26-ish, 27, which was my next target. So since we know we don't know, who knows? So it was a long to here, to there. And what you'll see is right here, when I saw absorption, that's what's going on here. I punched out of so I dumped my runner here, got out of the trade. Now we pull back here. I don't have a trade here because I know now there's stops under here, and this was too high. So that's kind of how I do it. Now, so at this point now, I'm standing aside. I have no position. Now, I have another trade that I posted in TraderLab that I did not get. And a little frustrating, but I have to just accept it because, and it's called the IBF. And I posted this, that my next trade, and this is before we ever got down here, would be from here back across the range up to the open target, which was this, and then there's more up here if we get there, this and more up in here. So those are the targets for the long. So the best, not the best, but the trade I wanted was here. We pull back here, and I discussed this in TraderLab, and, mentally I was a little annoyed about it, but that's just emotional. I have in my trade plan something called it's called the IB failure. It's a structured trade. And the way it works is at 9:30 my time, Central Time, the first hour high and low are locked in. If I come under here, which is the first hour's low, this is the opening swing low right here. So there's stops under here, right? So I'm thinking, well, if I come under here and take out the weak side, and then I do have the gap, which is somewhere in here. And if I come back inside, it's a long. It's a structured trade. And then the trade will go to here, out the top, and then there or wherever, okay? So that's the trade. So what happened is it came right to the location, but it did not take this out. I saw everything. I see absorption. I see the sellers. I see buys. I see sell stops coming out. I also see icebergs buying. So I had everything for a long with one piece missing for me in my plan. And that is one tick, or at least one tick of the opening swing low. Didn't do it. I see the long, and I did not take it because my plan says one tick or more. Didn't do it. So I didn't take it. But let's look at the trade. Others in TraderLab did. Congratulations, those of you who did. But let's look at the behavior. If someone took this long, this is the scale. This is called mean reversion. And the idea is to get in alignment after the weak hands get flushed out and for a continuation mean reversion trade. So this is a long. I did not take. And of course, I'm very excited about that. Let's watch the structure. And the target is this. There. So that's your target. Now, there's more. Let me try to show you this. This is a potential long here and here. So this when we break here, this is potentially a long. There's absorption here. We break above it. This, I'm going to put a little line here. I'm just going to show it to you. This is more advanced kind of stuff, but break high, pull back to the absorption, microstructure, and then microstructure. You have two structures. Now, this is not something I suggest to anybody, but it's an advanced process. There's the pullback. Okay, so that's a long, and you're going for this. So it's a very, it's tradable, but whether or not you want to get involved, that's up to you. Now, there's more. We have another trade, another structured trade. This is more advanced processing. So let me actually do one more little thing for you here. We're almost caught up. This, remember, this was the retail price that we had fallen from the 19-ish, and we fell all the way down, into the abyss. Now we come back, it's a target coming up. This is the next higher time frame fractal target up. I remember, top of the stream, I went through all this. So now I come back up. If this is now, if we check it, and it's not too high, but now it can become too low, that puts this and this on the hit parade. So I get my sellers here. I break above the sellers. This is absorption. Look at these icebergs. They are selling, hand over fist here. We take them out. This is my location. I draw a little line there. Now I'm going to show you something else. Again, advanced concept. And this is all Trader Lab. Not suggesting anybody do any of this. I'm just showing you market mechanics. How the market works, why it does what it does, and how at times you might get in alignment with it. So break high, pull back and test the absorption. Test here. See the symmetry. Look where the naked volume point of control is. Break high. So this is a long. This is the target. This is the target. So that's a long from here, advanced. Now let me go into more of a structured trade. This is the IB high. We have a structured trade in the Trader Lab called the IB continuation trade. It is a long from here to there. Another structured trade. And there we are. So you're current now. And now we're going for this. And there's just another target up here. Let me find it. Where is it? 35-ish, 34, 35. It's when we NFP, and in the ETH, I make notes of these things. I'm just going to put NFP in here. This is where we broke from in the ETH off that NFP report that was, I guess, kind of, I don't remember, but the market did the Acapulco cliff dive, and we had our whole down move after that. So this is a target. And then this and wherever. After this, it's kind of like hold your breath, get your oxygen mask out. Anyway, thanks for your patience, guys. This is Trader Lab. This is Trader Lab trading. It's not, everything is random. You have to vet all these for yourself. But if you're in Trader Lab, you've been having a pretty good day. And that's what Trader Lab is all about. Good days and days that aren't so good, because that's the real world of trading. We all take losses. We all take stops. We even hit our loss limits. But the business of trading is really based on treating it like a business, not being emotionally attached as best we can to the outcomes, trading with structure, having defined processes, and not gambling, attempting to sit with the house and only taking trades that have a statistical edge. And yes, we take stops. So everybody does in this business. And what is a stop? Not a personal failure. What it is risk management, overhead, cost of production. The casinos pay the gamblers. That's why the gamblers keep coming back to the table. The casinos only play games that have an edge. Over time, in the random distribution of outcomes, they extract the dollars from the gamblers. They have gamblers walk out with suitcases of cash. I'm sure the casino at this point is not personally attached to the outcome like we are. They do not change the game because somebody walks out with $100,000 in a suitcase and now blackjack becomes a 10 card game instead of a 7. They play them exactly the same way. If you're not treating your business with structured trades, then you, in my opinion, are the gambler. And that is not a sustainable process, in my opinion. Now, you may have a sustainable process, but statistically speaking, that doesn't seem to have a good outcome for retail traders. Questions? And thanks for visiting the Trader Lab. Yeah, Costello, you hit well, the stop limit's more important than any one day of trading. And I understand how it feels. I have a stop limit and I hit it. A limit, loss limit, I should say. I hit it, and I hit it from time to time when I just am not in alignment, or the market's not in alignment with my plan. It's either my plan's not in alignment with the market, or I'm not in alignment with my plan, or my brain is not in tilt. Sometimes I'm just not there, and those things are built in. It's not what it's the plan that is creates a the plan creates a sustainability if it has an edge. Um, we are the random components in the plan, and the market's the other random component. The behavior of the participants. Something needs to be anchored. So if I find I'm just trading poorly, and it's like, there are just some times where it's like, who's sitting here? If that happens, and especially in contexts that are more difficult for me, mean reversion is a difficult context for me. I take more stops in it. So that's this rotational trading. When we're in a directional move, for me, that's just, I have more of an edge in it. When I get into chop, then I'm trying to find outside edges to get long, to come back to the mean. And what's difficult about it is you can think you're at an outside edge and then it just takes you out. Well, if that happens too many times, I can hit my loss limit, and then that's that, and it does happen from time to time. My objective is always to get risk neutral as best I can, so to get a scale, so that the worst that happens is I scratch. Unfortunately, not all of those, I don't get risk neutral all the time. And that's just the way it is. So yes, loss limit. The thing about I know we are emotionally attached, and then when we see a big move, like I missed that long from the low of the day, basically all the way up to my targets here. I think that was a 30 point or whatever it is, 5403 to, look at that 20, 30 point move. That's a substantial trade. That would have been the trade of the day for me. I missed it. And I missed it for, unfortunately or fortunately, but I missed it because I have a rule for my trades. And my trade plan says I want it to take out the opening swing low by one tick or more, whatever it is, because there's a pile of stops under here. Now, I had a choice. I could have gotten in, but then I'm violating my plan and I'm going to get rewarded for it. Then the question is, what's the right thing to do? Well, over a large sample size, for me, the right thing to do is not to take this trade or take it from another location. So this long right here. In fact, when I saw this happen, I saw all the pieces for a long. But this is the microstructure right here. It never came back to it. Because if it did come back, I'm just going to show you this. I don't believe it did come back. See, it never came back. So right here, actually, here, so we had a variable high volume node here. So this is a location for a long. It's that variable high volume node. And it comes from the RTH open. So it's like right wherever it is. I think it was right here, someplace. There, where? Somewhere over here. This there. Yeah, it's right down in there. The and you can't see it, it's covered up, but it's right there. So this is an outside edge. I'm going to put another line over here just so we can see it. Now, when we came down again, there, that's a long for me. But because this was here, I wanted it to come under the IB low. So this has all the pieces except one for a long. So this is a structured trade, but not for me. Again, my plan required it to pop. So right here, if it popped, came up, it's a long. If we came back here, it would be a long. So it didn't happen there. So that, anyway, I'm just showing you that trade, just the way it is. You know. So anyway, this is all longs. So now back to the Trader Lab, structured trades. This is a long against here. That was a structured trade. Break high at 9:30, right? So we break high, we pull back. This is a structured trade in the Trader Lab. So these are all longs. So these are all continuation trades. Long, 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 and you're hanging in there. So you have many opportunities in Trader Lab for additional longs. So if I was not streaming, I would be on all of these. So I would still be having a fine time. You know, just, I mean, the fact that I missed the trade, these are all, you know, it's a trade, not the last trade. So long, 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 long. This is called the IB continuation trade. Here's our targeting, and there's more. So anyway, questions, please post them. This is Trader Lab. If you find this interesting, please give a thumb up in YouTube down at the bottom. Also, if you're interested in the Bookmap Discord Trader Lab community, it's a no-cost community. There's a link in the bottom of YouTube. You can access 60 PDFs of these structured trades so you can reverse engineer them, make them your own. Also, there's a library of webinars that are exclusive to the Bookmap Discord Trader Lab participants on how this process works in many different market configurations. It's not plug and play. If plug and play worked, we'd all plug and play. Doesn't work. At least it didn't work for me, and I certainly tried it. I built trading systems and a lot of things of that nature over the years, and everything would break down. What I found was I needed to have a flexible process that would align with the market, not trying to fit the market into a rigid structure, but in other words, be fluid to the changing behavior. So I don't use any indicators. What I do is I just read a language of the market. If I understand what this means, then I can be in real-time alignment. Why did the market do this? Auction. This is an auction. Oh, it's on sale. I'm not paying that. Oh, it's on sale. I'm not paying that. And then the buyers take control. What does it say? This volume in here, and you can see it right there, where this line is, was too low, because that's where the volume is. Order flow shows me there is absorption here. You see the buying delta, the green bubbles, and this is the absorption detector. It's detecting the selling icebergs. And the thing about absorption is, it's almost like if the sellers are selling and the buyers are buying, pretty simple actually, and the buyers consume the sellers, then what does it mean? It means potentially higher. If I come back to where the absorption was and the high volume was, and I test it and it's now too low, test, it's a long in the Trader Lab. And we posted this and discussed this in Trader Lab too. 19 was support. And this was the target at the time. Then you get continuation trade here, the IB continuation trade, right against this structure, right here. So that's a long. This is, all these are, and let's look a little further. You see this high volume here? I'm going to keep showing you longs. You might as well look at them. This is all Trader Lab. What's this? If this was a long down here, and this is a fractal or higher time frame of the same thing, is it possibly resistance? And if you break above it, might it become support? If it does, it's another long in the Trader Lab. Are you guys seeing all these trades? Help me. Give me a thumb up. Big question. Costello, it touched the IB low. That's not qualified for me. It has to break the IB low. Are you guys tracking? I don't know what alert's going off here. Something's going nutty. So we're taking our sequence of targets, guys. We're up in the ozone. I'm getting the oxygen out. Are you guys, is this making sense, guys? Are you with me? Yeah, Costello, it doesn't mean that somebody couldn't take it. In hindsight, naturally, I wish I took it. And maybe, you know, but I didn't take it. I didn't take it because I have a plan. And, when you leave 30 points on the table, then you start questioning yourself. And I could say, Jekyll and Hyde. Hyde comes out, and then it's a FOMO thing. So as soon as I feel that emotional stimulus, I actually get more cautious. I don't get more aggressive because I know now that I have uh, the emotional state of regret and revenge. I want to get back. Like the market owes it to me. No, the market doesn't care about me. So, but this had absorption. See all the pieces? This is the IB trade. So the buyers were here. Here's the absorption. I break above it. So this is where the long is. But I didn't get a pullback. So, I just let it go. That's me. I'm okay. But look at all these other trades. You see? So it's not like there haven't been a lot more opportunities. So there's this, this. This is the scaling or targeting. This is a continuation long. Same trade as that. The long here, which is there, is the same as the long here, which is there, which is the same as the long here, which is there. Longs, longs, longs up here. Continuation. These are all trades. These are all Trader Lab. So these are all structured trades. I think today's a nice day for many traders in the Trader Lab who have done the work and just follow their plans because this is structured trading. And if you're interested in what this is, how this works, and understand there's no holy grail of trading, it just doesn't exist. But the thing about it is, if you understand how the market works, and you're also prepared for when things just don't work, because they don't, you're going to take stops. You're going to have losing days. This is trading. If you're going to be in the trading business, you got to come to terms with your emotions, how you feel about it. Because how you feel about it is going to determine what you do about it. Or if you feel if you're controlled by your emotional state, you will not have longevity in the business. You have to find a way to disassociate your feelings from your actions. In other words, I feel it. When I didn't get that trade down below because it didn't exactly align with my plan, which I've promised to myself over many years that I'm going to be disciplined and not let one trade, this one, even though it's a beauty, one trade take me and create inconsistency. As soon as I do that, it's not this one trade. It's all the trades. Because then I've had reinforcement for a behavior. For me, just me, that will ultimately lead to many losing trades. So one trade I need to be thinking about all of them over thousands of trades, not just one. And again, that's just a personal decision. Now, could I have entered there? Yes, I could have. But my plan said, no, so didn't do it. But look at all these other trades. So where am I for the day? Well, if I was able to take these and not streaming, because I can't multitask, I don't do that well. It'd be immaterial in the scheme of things. This is our next target, not a recommendation. So anyway, that's kind of the way I slice the enchilada. Hope you guys are getting something out of this. If you're in YouTube, please give a thumb up if you're getting value from Trader Lab and what we do in Trader Lab. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You can click it. It'll take you to the Bookmap Discord server. You just have to join. There's no cost. And then you'll also have access to a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap. Order flow is really important for triggering and reading behavior, seeing icebergs and what the market does. You know, the fact there's all these icebergs going off is important. What's more important to me, when I see the buyers and I see the selling icebergs and you see them absorbing, what happens after? If we take them out, it means we're still going north. So all I'm doing is I'm using now order flow. My trading is based upon volume, order flow, and structure. The auction is really a structured process. Trading is a structured process. The purpose of the market is to figure out what's too high, what's too low. It's not your indicator crossing a line crossing over, you drawing a little line with a ruler or tweaking your MACD or whatever it is you're using. There's nothing wrong with an indicator if you understand where it fits in a process. It is not the process. It's an output of price. If you understand market mechanics, you might be able to better understand where an indicator might fit and where it doesn't. Have you been fading today, trying to pick tops and getting short? If you have, your indicator will do that for you. But if you understand market mechanics, you would not be doing that. If you understood how the market works better than you might do now, you would only be taking longs so far. And at some point, we know the indicator will get it right. Where's the high of the day? I have no clue. What is this? This is a microstructure. Let's look at this little thing right here. So let's look at this. Buyers, sellers below. Buyers don't get above here. This is microstructure. This is a micro short. Now, it's not a short. It is nothing unless you think it should be. Let's come back. So these are all the targets I have. And I could tell you if I'm trailing, here's what I have. Let's kind of look at this from a few angles. This is too low. High volume node. I'm going to show you some ideas. There's the high volume. This is like a store. Too high, too low. I'm going to draw another little box around here. I want to show you how this works. And it's just one way to do it. You know, I'm not saying it's right. I'm not even saying it's good. What I'm suggesting is it's based on participant behavior. This is a consolidation, break high. The buyers were active here. This is a consolidation. You could be out of this trade or you're just going to ride it out. This is like Hurricane Katrina, you know. Do you feel lucky? I don't know. Do you? Let's watch. Let's see what it does. So for me, if I'm hanging out here and I'm managing my trade, here's what I know. I know this is too low. Let's come over here. I saw my sellers here. Now, when you see this, now the sellers were here. They were absorbed by the buyers. Sellers take a shot here. This right here is too low. This was too low. The volume right there. You could be out of this trade subject to right here. So this is what you've got. Too high, break low. Sellers took control. This right now, it's too high. Right down here was your support. You'd be taken out of the trade if you're trailing here. If you're trailing here, you wouldn't. Who knows? I don't know where anything is here. But so let's just take a look. What's resistance? This is, and this is. So let's watch and see what it does. These are not trade recommendations. What do I know? I know this is too high because my sellers took over. I know this is the outside edge of this distribution right here. So I can come up and check in here and back into this, or this when the sellers took over. If I don't come back here, then we can fall out. And so this trade could be over right here. And nobody gets the high of the day. Well, maybe you do. I haven't figured out how to do that. I certainly know of traders who claim to sell the high and buy the low. Of course, nobody's ever shown me anything. I will tell you, I've bought the high and sold the low. And actually, in reality, I have sold near the high and bought near the low. But I've also bought the high. Those are the ones you remember. And when I was learning early on, I thought trading was a predictive business. Where is it going to go? And part of that was when I first learned trading, technical indicators were just coming into vogue, and we were getting access to Wells Wilder, things like that. I shared an office with George Lane. That's in my primer webinar. I talk a little bit about my background. He created stochastics. So I shared an office with him, and I thought this was it. I said, now we got it. Well, So let's watch this behavior. So this is support. Now it is what it is. Let's watch. This is resistance. Now this is not a short. The context is up. It might be an exit. So a couple ways to think of this is, first of all, you see this, you could just hit the eject button, the canopy blows off, and you're out of here. Or you're waiting for a retracement. Or you just trailed your stop and you're taken out. 3-4 points. That's not unreasonable for trailing a stop. And your last long was here. See, I can live with that. Can you? So this is Trader Lab. Now, nobody, unfortunately, nobody knows where the high is or the low of anything. So for me, the longs would be over for the time being. Then it's structure. Are you guys with me? Do you have any questions? How are we doing in YouTube? Please give a thumb up in YouTube if you're getting something from this. Down at the bottom, it helps the stream. Also, if you're interested in this process and building out the business, this is about career building. That's what the Trader Lab is about. It's not a trade calling room. What I do is just what I do, But what's important, I think, is that if you can learn to define behavior, you can build something around it. The 60 PDFs that I share of structured trades, you can use them like a template to reverse engineer structural trades. And I think the basis of trading is to you start with something and then you refine it and tweak it. The other part of it is there are traders who are going to sell this and they're going to look to buy this. They're going to be, quote, short-term rotational traders. That I don't do that. I used to do it. I don't do it. I find trading less is actually more because it creates patience and discipline. And the payday, again, only for me, I'm only talking about me, is the larger rotations. Now, if I have 37 to 39, it's not worth it. It's not worth the commission or the risk. My risk is very constant. So I'm pretty much risking around 3 points or less if I can. I want to get more for my risk. I'm not risking 3 points to make 3 points. That doesn't work for me. So I just sit outside and wait for the trades that have the potential. So I'm looking, if the market is long now, I'm looking for these longs. Remember, the market goes up to go down. The market goes down to go up in all time frames and fractals. The market is long. So where's the stops? Well, I know this was the last area where I had buyers. Stops are under this swing. Let's just watch the behavior. We'll see what happens. So take a look at the behavior and start anticipating. Narrate it. It goes like this. If this is too high and I break, then what? Then potential pullback to here. If not, then what? Then potentially lower. If I get under here, all I'm doing is taking all these longs out now. That's why you need a trade management process. Now let's come back. Let's look at where our last area was, where our sellers got trapped and our buyers took over. It's here. Let's just watch it and just narrate it together. If you're in Trader Lab, you would anticipate a location of potential behavior. It's not a trade recommendation. You would already know this is here. And there's the high volume sitting there, which was created by that. These are not trades. We're just cruising together. Why is this behavior? Because we had an auction. These guys were absorbed by the buyers. We just came down and took stops. This sets up a potential area to observe. And this is where it was too high. It's actually got to get through here, microstructure, and then to here. Let's see if it does it. Are you guys tracking? Trader Lab. Well, Cocobolo, that's great. Yeah, Cocobolo's in the Bookmap Discord Trader Lab community. Thanks for that. He was short going for the gap fill. And as you guys know, I wasn't short. I was looking for the long. Both are fine. He didn't get long, and neither did I. So Cocobolo will have cocktails together. But we both controlled our emotional states. And I will tell you guys, when stuff like that happens, what I've recognized over many years of doing this is the lunatic that's always right under, it's like the voice in your head. I call that, there's Jekyll and Hyde. Hyde's the lunatic. And the lunatic is the voice in your head that creates impulse that's not in your best interest and is not aligned with the business of trading. And it will be, I believe, if anyone comes to Trader Lab and they do the work, and it is work, roll your sleeves up and commit to creating a career. In other words, you want to be a professional in anything, you got to go to school. And school is not 2 weeks and now you have a printing press in the basement. Let's be real. You come to Trader Lab, I believe, if you do the work, and that means a lot of work because you got to vet these things and see where an edge shows up. Like, is this an edge? Well, for me, this is an edge. It's not a trade recommendation because I take stops. What do I have to do? I know this is resistance. So if I get long against this, then this is my area, but I have to clear this volume right here. So let's watch it. If I get over this, I get to this. And then I can continue back to here. Let's watch it together. But what I was saying is, the voice in your head is your emotional triggers. And we respond without conscious thought to it because it's wired into us. Part of becoming a professional or career trader is you're going to hear the same thing. We can't stop it. I spent years trying to stop it. Behavior modification, cattle prod. I actually had a thick rubber band on my wrist. And when the thoughts would come into my head, I would snap the rubber band because I thought I could change. But the thing about it is we have kind of a reptilian brain, and then our consciousness and intellect is layered on top of it. The reptilian brain is what caused the species to evolve and develop. Let's accept that for a moment. And by avoiding the saber-toothed tiger and whatever else was going to chew on us, avoiding risk and hearing, that created the ones who actually figured that out, even with a low level of developed intellect, survived. So that was kind of like natural selection. So we are still wired to do that. So the thing is that natural selection is the voice in the head. And it doesn't matter that you have an edge or you don't have an edge. What matters is that voice is always there. So if you get long here, that's why this was too high. So this is why you got to be thinking about this obstacle. So this is kind of where you have to have a trade plan. Is this a viable trade? You have to be looking at this. And if you can clear this, then you're going to go to this. If you clear this, you're going to go back to that. That's what I know. I don't know anything beyond that. That's it. That's how difficult this is. Now, here's what's really difficult. Not this. How do you feel? Your fear. You see, isn't that the difficult part? Come on, guys, let's be honest with each other. Isn't this the thing that stops us? Uncertainty. Isn't that it? Is it going to get here? Do I need to scale here? Where can I get long? Well, if I see this, I'm probably getting long here. Can I get a scale here? Is it going to hold here or is it going to stop me out? If I clear here, I go here. If I clear here, I come back here. Why is this important? This was the high where we rejected. So I have an outside edge there and there. If I clear here, I got this and this. If I don't clear this or this, then it's hasta la vista. Let's see what it does. This is Trader Lab. Is it certain? You know what you have in trading, guys? The only one thing that's consistent is maybe, or the other term is uncertainty. And what does our psychology tell us to do? Be certain. Never be uncertain. Look for predictability. Look for certainty. Why? Fear. What triggers the fear? Primal wiring. It's all what it is. And we're constantly fighting it. How do you get control of your fear? Statistics. Take what is random, which this is, and nebulous, fearful, and create statistics that make it tangible. Instead of being controlled by your emotions, be controlled by your experience and your statistics. This is a long, that's your obstacle right there. There's your next target, and this is your outside edge right in here. If I can get through here, I can keep going. For me, you could just do bang, bang, and be done with the trade, or bang, bang, scale, hold, trade manage. Now, right here, we may come right back down or come up to the next level. Can you guys see what's going on here? And does this make some sense? If it does, please give a thumb up in YouTube down at the bottom and come on over to Trader Lab, guys. There's no cost. The thing about the Trader Lab is it's a community of traders. It's no nonsense. It's not romper room. This is business. If you're interested in the business of trading, then come to Trader Lab and roll your sleeves up. There's no simple in this in the sense of plug and play. There's no such thing as the magic indicator or the holy grail. Or if there is, and you have it, come to Trader Lab and share. We'll share ours. It's like, show me yours, we'll show you ours. But, and there's not one way to do this. But remember, this is the area to test. So this could be here to here, or here to here, to here, or back to here. And this is the area we got to get through. I hope you're appreciating this. I hope you're seeing there's a method to, as they say, the madness. So if you're, depending on what you're doing, the long could have been out here or here, the trail. You put it back on here. You go here. You come back to this outside edge right there, because that's resistance right there. Does this make sense, guys? Give me a thumb up. Yeah, Ryan, you don't need to sign up. There's just a link in the bottom of YouTube. It'll take you to the Bookmap Discord server, and you join. It's just going to verify your email, make sure you're not a bot, and say hi. And then in the Trader Lab, it's a very helpful community. Everybody is, we help each other. We're all trying to get better. One thing I can tell you about trading, if you have a career in this business, and I've been doing this going on 45 years, I do replays, I practice, I look at things, what can I make better? And I take stops, and I do from time to time hit a loss limit if I'm just not doing my thing right. Or actually what tends to happen is if I'm not in alignment, Either me mentally is just out to lunch, which can happen, fatigue, stuff like this. And I have rules for that, by the way. If I'm tired, I will not trade. I have a certain protocol. I have to, if I'm overtired, as an example, I don't need to trade. So I guess this long was okay. What do you guys think? Let's watch this behavior now. Right here is our outside edge. Sellers are back here again. There's your absorption. There's your icebergs. Let's look. The link in the bottom of YouTube will bring you over to the Bookmap Discord Trader Lab community. You need to, say hi. There's no cost. You also have access to all the additional education, stocks, options, crypto, market maker behavior, algorithmic behavior, position trading, whatever your thing is, And we have a number of different streamers. There's a lot, different ways, I guess, to approach this. Trader Lab is really more about understanding market mechanics, how it works, why it does what it does, and then structured trades. Because the market has certain behaviors, and it's about waiting for your trade. And as I showed you here in the stream, this is what it is. I mean, I don't think it's more complicated than that. This is the long. So you would know this if you're in Trader Lab. That's the thing. And you would know this was too high and we broke from this volume here. So you have this and you have that. And if you get through there, you got that. You could be done with the trade. Doesn't matter. It's all up to you. Or here to here, and then you put your helmet on and you trail under here or under here or under here. And then you're just you're doing your thing, and you're just trailing. It's all up to you. This is all trade plan specific. We got a stop sweep here and absorption. So we got absorption. We might see our counter rotation right here. Let's watch it. You see the volume coming in here. This is a trade management opportunity, not a recommendation. Let's follow it. Sweep, absorption, microstructure. Sellers are here. Sellers are there. Volume is sitting here. If we break below here, we need to see the reaction. If we don't break below here, we keep on trucking. So it's this or that. So let's watch. These are not shorts. These are opportunities for us together to observe market structure and behavior. I don't use indicators. What my indicator is the language of the market, participant behavior. I got a buyer here. I got nothing up here so far. If I can't get above this, okay, there we go. Then questionable. Let's watch. More sellers, more icebergs. We have to watch the volume in here. This is a consolidation. You can see it. You know what a consolidation is. It's rotation. I trade in what's called fractals. And all a fractal is another way to say time frame without the clock. Think of fractals like Russian dolls. You know how Matryoshka dolls, they're inside of each other. That's what a fractal is. They're inside of each other. So the bigger, higher, larger Russian dolls going up. Inside of the Russian doll are little ones. And they're all the same. We're seeing the same thing. This is a Russian doll. There's the volume right there. If it's too low, I'm going to leave it. Then I'm going to do the same thing over here. If it's too low, I'm going to leave it. Then I'm going to do the same thing up here. If it's too low, I'm going to leave it. If it's too high, I'm going to leave it and come back the other way. So I can use it any way I choose. Trade management process. That's why this little line is here. And that's why I can manage my trade by understanding the language. My indicators are looking back. Does my indicator say what? What does my indicator tell me? Get short? Get out? Or does it tell me, well, this was too high and too resistance can become support. Resistance, support. If I can't get back over here, subject to your trade plan, you'd hit the plunger. You know, the canopy blows off and hopefully off you go. Now we want to watch the behavior here. Watch the behavior. This is what's important. Do we keep going? No clue. This is too low. This was maybe too high. Come back above it. There's your support. Questions? Yeah, no, well, you're welcome, guys. And I appreciate y'all visiting the Trader Lab. This is what goes on every day. I do narration, not this. I do not call trades. I'm allergic to that. It doesn't help anybody. And I take stops, so you can always take a stop. You don't need me to help you with that. It's part of our business. Uh, the thing about Trader Lab is it's based on structured trades that are available to everybody. There's 60 PDFs. I'm just going to show them to you for 30 seconds because you know this is long. And this is what they look like, you know, actual descriptions, circles, arrows. I'm not a vendor. There's no cost for this, you know, and I did these a number of years ago, you know, 2021, 2020. And I did a primer webinar. You can all take a look at that. And this is available to everybody in the Bookmap Discord Trader Lab. And there's no cost for this. Now, the thing about even those PDFs, I'm not a vendor. And when I did them, there's no specific course. It's a community. The course is the community. It's everybody collaborating and showing their stuff. Here's what I do. Well, here's what I found. Here's this. Here's a trade I took. Here's this stuff. Questions. What about these icebergs? Do you take a trade when you see this, Tom? Or other traders in Trader Lab. Here's this mean reversion thing. Here's what I'm looking at. Here's my target. Where'd you get that target from? Well, it's the collaborative leverage. And in the learning process, it is the interaction, the questions, the screenshots, the circles, the arrows, and the pain that comes from the learning curve. This is a language. Now let's think about playing a musical instrument and learning to speak a language, foreign language. That's what this is. This is like learning to play a musical instrument, foreign language, or become an athlete, because we're going to compete at a very high level against the best on the planet. It's like playing the NBA, NFL, or whatever sport, du jour that you need on a professional level. How do you develop the skills to do that? You don't go to training camp, take a few swings, and now you're a pro. Let's be real. If you want to be a pro, you have to put the time in to get trained. And I believe, and I am somewhat opinionated because I've gone down the same roads most of you have, except it's taken me 45 years. And when I started out, we didn't have OrderFlow, we didn't have anything. Really had nothing. We didn't have candles. We didn't have an internet. We didn't have anything. No computers when I started. So I really came from a whole different place, right? So along the way, I got to do just about everything I could get my hands on. Anything, any book, anything I read, any idea I heard, plus I made up my own. And that's what I did. And I also coined a phrase called Trader Groundhog Day. That's when you do something and you think it has an edge and you get excited because maybe you see behavior and you try to tweak it and make it better. And then you find out, even though it might have worked in the past, that it has no edge. When I started, I didn't understand this is a statistically based business. This is doing a pretty nice job this long. What do you think? Some alert is going off here. Oh, next target, 49.5. I have another target above, past performance, not indicative future results, not a recommendation, and it comes in around 67. Not saying it's ever going to get there. It's not my job. But these are all the longs. plus the other ones I showed you earlier. And this is real time. So this is the best I can do, to show you what we do in the Trader Lab. And I want to really make it clear. We all get thrown under the bus. It's part of the experience of randomness. Notice this. Notice the microstructure. Notice the high volume. Remember where our last high volume was. It's here. Let me just throw a little bit of this. And now here. This is resistance as I define it. So this is where alignment comes from. Now we want to see if we come back to there, do we get above it or do we get sellers here? So right now there's pieces suggesting a downside rotation, not the end of the planet. And if we come across here and keep going, then that's fine. But this is resistance right here. So let's observe it together. I don't pick the high of anything. I'm completely clueless. I let the participants tell me. So what I can do is I can look at this and go, well, if I don't get above this area, then I can rotate down. That's what I know. And I cannot sit here and say what it will do. I can definitely tell you what it might do and where. So as a trader, if I'm sitting here and I have this, I will do this mentally or otherwise, and I'll go, okay, if I'm long, if I retrace here and I can't clear this, then I can break down. And then I have choices based on my plan. I can hit the eject button, or I just let it take me out at a level that's further outside. Notice the micro high volume structure here. So this micro is too high. Break. There's my seller. I have a test. Too high. Buyer is here. Sellers took over. Buyers are here. They're under the seller. There is absorption potentially taking place, and I can only tell you potentially because I don't know. The sellers are here. The buyers are absorbing the sellers. The sellers were absorbing the buyers. Resistance, support. By the way, the red bubble is the sellers. But why isn't it going down? Because the buyers, the passive side, the limit order book, we don't see them. We only see delta, which is aggressor. Delta is a combination of initiators, selling at the market, and stops. Okay? So what happened up here? Buyers. What happened up here? Buyers met with absorption. There's liquidity. Sellers took over. If I can't get above these guys, that means, and if I break down, the sellers are still here. And now I'm breaking down. You see how you might use this. So as in my world of trading, and I'm not saying this is good, I'm just saying is subject to my plan, right here, I might just punch out of the trade and be done with it. It doesn't matter. I can't pick the high or the low of anything. Never been able to. Why start now? I just manage my trade and I go on to the next trade. It doesn't matter. If I break out above here and I have structure, I can put a trade back on again. Does that make sense, guys? You getting something out of this? This is Trader Lab, and you're all welcome to visit the Bookmap Discard Trader Lab community. Ryan, yeah, the 60 PDFs. By the way, the PDFs on their own are not going to make sense. There's a primer webinar. It's in the Bookmap Discard Trader Lab. It's pinned to the top right. There's a lot of resources, statistics that you have to vet for yourself. The 60 PDFs show these structured trades. They were really a broad stroke. I'm not a vendor, so there's quote, I didn't create a trading course. A lot of traders started asking me questions about what I was doing. It's like, what are you doing? I'll go, well, here it is. And I have no issue about sharing what I do. There is no secret sauce. This is, I think anybody can do this, or at least learn to do it. Now, whether they can do it, I believe anybody can learn to trade if they do the work. And the thing is, nobody wants to do the work. They're all in a hurry. The problem is you got to do the work. It's a commitment to career building and development. No, if you want to be a surgeon or whatever it is you want to be, or an artist of some kind, this is art, among other things, like music or speaking a language. You're not going to learn the language quickly. Notice the behavior. If you can understand how the market works, not your indicators. See, and I'm not against indicators. The problem we have, I think, in the retail space is we think this is a business of indicators and time frames, and that if we somehow mix and match and get them the right one at the right time, that somehow now we have an ATM in the basement. That does not work for most traders, given the failure rates over 90%. Now, I can't say you won't fail anyway, but I can suggest that the indicators are an output of this. Not what it's like the tail of the dog. The indicator does not wag the dog. The market is what creates the behavior of the indicators. If I understand what happened here, and I understand why this is here and why this happened here, does that do something for me that other retail traders are not able to understand or even relate to? I think it does. That's what TraderLab is. And if you are interested in TraderLab, a thing I suggest you do is you vet it for yourself. Come to TraderLab, ask in the TraderLab community, what would they do differently? What our nature is FOMO. If there's 10 setups or structured trades, you're going to want 10 of them. If you can't build a template to do one correctly, then you don't need any, because you'll just be visiting. You won't be able to sustain. Discipline starts from day one in the TraderLab. The discipline to pick one structured trade, and you can ask in there what if those other traders in there who have built are building careers, have gone on to trading funded accounts, who are now profitable when they weren't profitable previously, no matter what they've done or where they've been. It has changed lives. And I'm not saying it'll do it for you. In fact, I suggest maybe it won't, because it takes a special person to do the work to create a career. Human nature wants easy. Success in any business, if you've ever been in business, takes something different than what most are willing to do. If you're willing to do the work, I believe you can learn to trade. Then you have to vet and create statistics that make this behavior tangible, so you understand how the market works, why it does what it does, and when your edge shows up, that you have to manage your fear and do your job. Not easy, but if you have a statistic, it makes randomness tangible, and that helps. Please give that thumb up on the way out. Remember, these streams are available exclusively to Bookmap Discard TraderLab participants for screenshots, circles, arrows, review, and to build your trade plans. And all of you that are visiting today in YouTube, please give a thumb up on the way out. Click the link in the bottom. There's no cost to visit the Bookmap Discard TraderLab community and take advantage of all the additional education. Thanks again, guys. Look forward to seeing you soon. And TraderLab, I will be visiting you shortly. Thanks again, everybody in TraderLab, for your support. And those of you visiting in YouTube, I hope to meet you personally in the Bookmap Discard TraderLab community. Thanks again.